we had the neckline right there, and we basically had, one could say a triple bottom or a double bottom, but nonetheless, it's still a clean and clear reversal pattern that we had. That reversal pattern that we had after a pullback, right? Because remember, the overall trend is bullish, and within us retracing, creating lower lows and lower highs, we then had this clean and clear triple or double bottom, depending on how you want to look at it. We broke above neckline. Then we came back to literally retest, and we started to continue with the overall trend, right? So now when you look at this, you have the market giving us a clean and clear bullish Elliott wave that we have. We have the market giving us a wave one, wave two, wave three, wave four, and wave five, right? Just quickly highlight it. There we go. Or maybe use a darker shade of green. So we have the market giving us a wave one, wave two, wave three, wave four, wave five. Now, every rule of this Elliott wave was proper valid, right? Proper valid. And then what we've been doing literally all year, in 2023, is we've been correcting, right? We've been correcting, having our correctional wave A, B, and then we just completed our wave C, right? We just completed our wave C right there. Just completed our wave C. Now, for any one of us that are familiar with our Elliott waves, what do we expect when we have a full cycle of any type of Elliott wave from there onwards? If you know, just kindly type in the comment section, right? Just kindly type in the comment section. If you know, we have a fully completed bullish Elliott wave count, right? We've fully completed the cycle. What now are we expecting? We're just touching on a little bit of education, and then we're gonna move on. And then we're gonna move on. So I see we have start wave one. Okay, so definitely this is the principle, right? Definitely this is the principle, right? I'm just gonna slide up a little. This is what we normally look at. We say that you have waves within waves, right? You have waves within waves. So when you complete the cycle, you then start a bigger Elliott wave count. So this whole wave, this whole motive wave count that we have is our new wave one. Now we've just completed our wave two, and what we want to do is we want to complete our third wave from here onwards. But when you zoom into the smaller time frame, definitely we're starting a new wave one, right? We're starting a new wave one, wave two, three, four, five, and we continue moving in this particular fashion, right? So we definitely on point. Definitely on point when we look at this. So what we've done is we've completed our wave C, and now we're starting a new Elliott wave at the turning point. Look at this, dragging our Fibonacci from low to our high. We got the turning point, 50 and 61.8, and we're starting to shoot prices going all the way up. So I'm just going to remove all of this. So the trend is our friend, and we're getting more and more confirmations, right? Look at this. We bounced at a key level of support, and we started to shoot prices going up. Now, if we then look at the trend that we're having, we said that we've been retracing, creating lower lows and lower highs, lower lows, lower highs. Then we had this lower low, right? Now you can easily have a descending level of resistance that we have here, right? Let's zoom in. Look at this. All right, we have the market giving us a resistant level there, resistant level there. We drop, then we have another resistant level. We drop again, we come back, getting rejected at this level of resistance. We came back, we were rejected, and then all of a sudden now, right? All of a sudden now, we are breaking outside. Look at this. We had this huge daily candle closing above our resistance, closing above our resistance. And then the next candle All right. The next candle came back to retest. Look at this, to retest. And if you look closely, you have a key level of support level here as well. All right. You have a key level of support that you have here. Like it's a support, support. Let's zoom out a little. Let's zoom out a little. Look at this. It was a clean and clear support level that we had, resistant level historically. Yeah? So what we're now starting to do is yeah? Going back to breaking resistance. And I mean, ladies and gentlemen, if you were to look at the candlestick formation that we could have today, right? That we could have today. Can you just please kindly confirm by typing in the comment section? We're breaking resistance, changing it into support, and we have a potential bullish candlestick confirmation. So if you know, once again, ladies and gents, can you please confirm by typing in the comment section? So everything, I mean, look at the basket that we're holding together, right? We know that the overall trend is bullish. We know where we should be turning. We actually saw that, right? We saw that we're turning at the 50 and 61.8 Fibonacci levels at the bigger time frame. No? Bigger time frame. And even better, the bigger time frames are in control, right? They are definitely in control. And we are now looking at the smaller time frame, right, to say we have a descending level of resistance that we're breaking and changing, and changing into now a support level with a morning star candlestick confirmation, potentially, right? Potentially, but I highly doubt that we'll get anything different from here onwards. Now, with this candlestick confirmation, ladies and gents, it basically indicates that we should be ready to buy, right? We should be ready to buy. Now, let me zoom out a little. There was a trend line. I mean, I've been trading. I've been trading this chart. I've been trading this chart, and we have a trend line right here. Nah? I've been making a bit of money with this chart. Nah? We've been bouncing here. Look at this. I really want us to look at this. We've been bouncing here with a candlestick confirmation. This is a morning star candlestick. The short price is going all the way up with the bulls. We came back again. Morning star candlestick confirmation. The short price is going all the way up, right? Now, if you remember correctly, earlier on, we spoke about this as a pattern. This was a clean and clear pattern that we had, right? This was a clean and clear pattern that we had. This was a potential, literally a potential head and shoulder pattern at the right place. Right now, naturally, if we were to basically go about respecting this head and shoulder pattern, we were supposed to get rejected literally at the neckline, then look at pushing prices going all the way down the initial 100%, right? The initial 100%. But we didn't get that, right? We did not get that, which now gives you a clear indication of how strong the bulls are when it comes to this chart. So we're adding on, we're breaking above a historical level of support. We had a false breakout, breaking above, shooting prices going all the way up, coming back with a candlestick confirmation, ladies and gents, right? Coming back with a candlestick confirmation. So we're not only breaking a resistant level and changing it into support, but we've gone back into this demand zone. We can't run away from this. That this is a clean and clear demand zone, demand zone, demand. This is where the bulls are always looking to shoot prices going all the way up from here, right? Shoot prices going all the way up from here. Now, before I move on, if you're still with me right now, ladies and gents, can you please kindly confirm by typing 1 in the comment section, please? And if you lost, just kindly type 0, right? All right, so we already have a comment. I thought it was gonna go down because when I look on the weekly, we see a head and shoulder. Yes, definitely, my brother. This is a head. Well, potential. This is why I always emphasize, right? This is why I always emphasize that we need to utilize the right terminology, right? Hence, even now, I'm saying we have a potential morning star candlestick confirmation because we wanna get this candlestick confirmation at the daily, and then we push prices going up. Now, if we had, a candlestick confirmation literally at the neckline, this head and shoulder pattern was going to be valid. All right. So you are definitely right when you say you have a head and shoulder pattern. It was a potential, right? It was a potential. Hence, we're always saying, listen, it is always safe, ladies and gentlemen, to not just execute once you break a support or resistance. No, right? It's literally an aggressive way of entering. Now, I know very well how we want to get in. We don't want to get lost. We don't want to miss out on trades, but it's literally risky. If you look at what we've done here, right? Naturally, by breaking below, market could have shot prices going all the way down. But the safest way is always a break, retest, then candlestick confirmation, then only you look at executing. Right. So this is clean and clear evidence, right? Clean and clear evidence of basically how we want to start to execute. Oh, my apologies there, ladies and gents. So we definitely have we definitely have our confirmations. We still together, right? So we just want to get this candlestick confirmation. And I mean, look at where we are being rejected, right? I mean, if you just look at where we're being rejected, this is a previous level of resistance, a support level, resistant, and we could start to see market just slightly pulling back, right? Slightly pulling back now, giving us exactly what we want in a bullish trend. We want to create higher highs and higher lows. Then we look at executing, right? Then we look at executing. Yeah. So we have all the confluences that are indicating that we should be pushing prices going up, right? So when we then drop down coming to the H4, when we then drop down coming to the H4, fair enough, ladies and gents. I mean, we had a clean and clear gap that we have here, and we always say that market, right? We always say that market will or should eventually, or basically will eventually come back to close our gaps. But just looking at this bullish momentum, it doesn't look like we're going to be closing this gap anytime soon. But I literally want us to focus on, right? I literally want us to focus on what the market is potentially starting to do now. Right now, let's go back, right? Simple price action. We said that we've been pulling back all year, right? We've been dropping, creating lower lows and lower highs, lower lows, lower highs. We had a clean low, we had a lower high. Fair enough, right? At this point, we didn't know that we literally going to start to break outside of this level of resistance, right? So initially, we wanted to create a clean and clear lower low, which we did, right? Which we did. And now we're shooting prices going up, getting a potential rejection where we are, and market could push prices going down, right? Push prices going down, giving us a pattern that will solidify a buy, because we're going to be having a potential inverse head and shoulder pattern, right? Potential inverse head and shoulder pattern. So long as market gives us this, pull back, break, retest, then we're going to get all the confirmation to say, listen, we're going to be forming our right shoulder, right? So we're going to be forming our right shoulder, which then now puts us in a position to say, hey, we are not really sitting in this position of saying we've completed our inverse head and shoulder pattern, right? We've completed our inverse head and shoulder pattern. So what are we waiting for? All right. Now we're going to have two entries. Literally on my side, I'm looking at literally pulling back more or less 1,909 levels as indicated, right? More or less coming here to retest our ascending level of support. Remember, which was a historical neckline, right? Or potential neckline, right? Because I want to now create a higher low, right? A higher low, get a candlestick confirmation, which is rather aggressive, but it's going to be a beautiful entry. It's going to be a beautiful entry, literally to confirm that we've clearly broken outside of this level of resistance. And even at the smaller time frames, we're coming back to retest, change resistance into support, and then we create demand going all the way up from there onwards, and idealistically then looking at completing an inverse head and shoulder pattern, or a clear right shoulder within this inverse head and shoulder pattern. Now, it's very debatable because someone else may come in and say, Mr. Ngiba, are we then nullifying this? Are we then nullifying this as a inverse, right? Are we then nullifying this as a left shoulder? I hope we can clearly see. Let me just maybe solidify the sky. Let me solidify the sky to say, listen, we have our left shoulder head and we have our small right shoulder here, right? Our small right shoulder here. And we're definitely not nullifying this as an inverse head and shoulder pattern. We have a sequence, or definitely an inverse head and shoulder pattern, because if we are to drop coming to the smaller time frame, it's literally clearer that we do have a lower low and a higher low. So depending on how you want to look at this, regardless, ladies and gents, right? Regardless, when you zoom in, we want the market to at least pull back, right? Pull back. Now, let's look at price action. Yeah, this is literally our previous. This is literally our previous low that we had, and we have this high that we're looking into. Now, if you drag your fib in an uptrend from low to high, remember we want our turning points, and we're always saying we want to come to our 61.8 Fibonacci levels and potentially our 50 Fibonacci levels, right? 50 Fibonacci levels, which is definitely then in line with us saying, listen, we want to buy after, right? We want to buy after creating a higher low, right? After creating a higher low, higher low. So we're literally looking at, executing more or less. Let me just remove everything. I don't wanna have a nasty chart, right? We literally want the market to pull back, come more or less anywhere between the 1,915 and the 1,903 support levels. And then we can look at clearly executing rather aggressively if you look at this. And then, of course, the more prudent entry would be, once we complete this inverse head and shoulder pattern literally here, then you can have a second entry, right? Then you can have a second entry when it comes to this chart right here. Then here we're gonna have a clean and clearer entry that we're looking into, right? A clean and clearer entry that we're looking into. So for now, we've literally clearly indicated the intention of gold in literally the next couple of days, if not weeks. All right. Now, when we look at this and we say, guys, right, already we're saying we have an inverse head and shoulder pattern, right? Already we have an inverse head and shoulder pattern, and we measure the distance from our head to our neckline. We're going to be going to our all-time high, right? We're going to be going to our all-time high short term. Now, when you look at this, right, this is very important. When you look at this, I'm a person that trades patterns, right? If we zoom out to the weekly, we're going to be creating a pattern here, right? We're going to be creating a pattern here. Let me just quickly confirm and verify. There we go. Now we're going to be creating a cipher. We're going to be creating a bearish cipher. All right. Now, in us creating this bearish cipher that we have, it will then promote for the market to shoot prices going down once again, giving us another buy. Right now, this is long term. Yeah? This is long term. Literally, this chart is giving us so much information to say, all right, sure, once we, play out this inverse head and shoulder pattern, we should potentially look at selling when we get to our all-time high, give us another high, apologies, a low that's higher than the current low, which will be then another formation. Remember what we said. We said because we've completed this, we don't want to forget this now, ladies and gents, right? We said because we've completed this bullish Elliott wave count, nah? Bullish Elliott wave count. Now we are restarting, nah? Now we are restarting a new wave one and wave two. So automatically, within us having this, now the chart is going to be a tad bit messy, a tad bit messy. If you look at it closely, then we now starting to create our new wave one, then our wave two, then our wave three, and eventually we look at breaking outside of this as indicated, right? As indicated. But for now, let's just focus on what we have. Nah? Clean and clear, bullish indication. We have an inverse head and shoulder pattern. We just want the market to pull back from here onwards. Nah? We just want the market to pull back from here onwards. Now, if you got this analysis, ladies and gents, before we move on, if you got this analysis and you're saying, Mr. Ngimo, we understand why we want to execute and you're happy, can you just kindly confirm by typing Y for yes in the comment section? Can you just kindly confirm by typing Y for yes in the comment section, please? I'm literally waiting for this. Oh my goodness, I'm waiting for this beautiful opportunity. I'm just super excited. I'm super excited. There we go. We have our confirmations right there. I see we have a question. Does this cancel the inverted head and shoulder pattern? Definitely not. Definitely not. And then we have a question. What about the fundamentals that affect the pair? All right, fundamentals. Now, ladies and gentlemen, when you look at fundamentals, we need to understand the behavior of basically this precious metal that we have, this beautiful commodity that we have. Now, when you look at gold, ladies and gentlemen, gold is highly impacted by a variety of things. Right now, someone else will say, Mr. Ngima, gold is literally affected because we have XAU USD, right, is literally affected by the movements of the dollar, right? Now, when we look at the dollar performance for the past couple of months, the dollar has been gaining. And if you look at this chart, if you look at this chart in the dollar gaining, we've been dropping, creating lower lows and lower highs all year, right? Creating lower lows and lower highs all year. Now, why has the dollar been gaining? They literally trying to control inflation, right? So how do you go about controlling inflation? You definitely want to ensure that you hike interest rates because inflation is directly proportional to your interest rate. So the US economy has had a very good labor market for the past couple of months, very high inflation, very high interest rates, and they're still going to remain higher for a tad bit longer, right? If you follow those fundamentals. Now, someone else will then say, but now gold is pushing prices going up. Does it mean that the US economy is now starting to lose its bullish momentum? No, right? But gold acts as a safe haven, ladies and gentlemen, globally, right? Globally. So if we find that in any economy, we have some sort of instability in terms of the economy, political ventures, we probably have whatever pandemics or sickness that is there, or we basically find that the banking system is going to crash in any economy, right? What people normally do is they find a safe haven in gold. Because when you look at gold, remember we said the trend is your friend, meaning that people are more comfortable with buying gold in an uncertain position of saying, listen, We're not sure what's happening with the US economy. We're not sure what's happening with the European economy. We're not sure what's happening with the pound or the Swiss franc or the yen, right? So rather than keeping our money in an unstable or uncertain economy, we're going to pull out our money and we're going to fund or basically buy gold. Hence, gold is clearly bullish, creating higher highs and higher lows. Now, the current fundamental issue that we are having, yeah, there's basically there was a bombing, right? There was a bombing that happened. I believe it was yesterday, if I'm not mistaken, probably yesterday, if not the day before, right? So there was basically a bombing that happened in the Middle East, right? Because of protest in basically West Bank and basically the Middle East. So within this bombing that happened, it was a bombing that happened in a hospital, basically killing or injuring, a huge lump sum of people, plus minus 100 people, right? Plus minus 100 people were killed or injured in this Gaza hospital that they basically had. Now, when you have such a drastic, when you have such a drastic event in any economy, as indicated, now the citizens will not feel safe in now keeping their money in that banking system because you have a huge instability that you have. So they pull the money out and they buy gold. Hence, you're seeing the strong impulse when we're looking at what we have now, the strong impulse of gold pushing prices going up, which then now nullifies, right? Not really 100%, but it literally for now nullifies what is happening within the US economy because you have the Middle East, people are taking out their money in that banking system and they're now buying more and more and more of gold. Hence, we have this clean and clear break of our resistance level, and we could see gold pushing prices going up for the next couple of days, weeks, or months, depending on what happens within that whole bombing system. Because it's not like the situation is going to be resolved today or tomorrow. So you're going to have more and more people buying into gold, right? So that is the fundamental aspect of what's happening right now within gold, right? It is a safe haven for anyone globally, right? In terms of any form of instability in any economy, right? And that's exactly what's happening now with this whole bombing in the Middle East and the Gaza hospital that basically happened. So that is the fundamentals. That is the fundamentals. Hence, we should be comfortable once again with buying gold. But as indicated, we want to get this lower high. We want to get this lower high. Now, someone else may say, Mr. Ngiba, what happens if we automatically break above, then come back and retest it? You're still good, all right? You're still good because this is still a higher low, right? It's still a higher low, right? It's still a higher low, but the ideal entry is us looking at the Fibonacci from the swing low to our high, come back to our 50 and 61.8, and then we look at buying. So, ladies and gents, if you got that, right? So if you got that and you're happy, right? So you're even happy as to why, even fundamentally, we good to buy, you understand? You just kindly confirm by typing gold in the comment section because, ladies and gents, we're gonna be making money. We're gonna be making money. We're gonna be making money when it comes to this one. But of course, ladies and gentlemen, risk management is key, right? Risk management is key. I mean, this is more or less the overall trend that I'm looking at, right? More or less the overall trend that I'm looking at. Probably coming to these levels, I think at most going all-time high, as indicated, because we said we want to create a pattern, right? A cipher pattern in this particular fashion, all right? In this particular fashion. But remember, our cipher can turn anywhere between the 78 Fibonacci levels and the 88, and definitely our 100 mark, right? Definitely our 100 mark. But then, of course, we have this assurance with this inverse head and shoulder pattern, which is in favor, right? In favor of the overall bullish trend, giving us a higher probability of playing out this inverse head and shoulder pattern going to our all-time high. Yeah, I see we definitely have our confirmations. All right. Ladies and gents, that is our gold. That is our gold, XAU USD. It pays to wait. Don't look at doing anything now, ladies and gents. Tomorrow, let's just make sure we solidify candlestick confirmation here on the daily morning star. All right. And then we should definitely start to look at entertaining any form of buying opportunity, probably from 12 today. Tonight, my apologies. So on that note, ladies and gentlemen, I'm not too sure, Mrs. Timber, do you have an addition when it comes to this one?
No, my leader. No.
All right, that's beautiful. So, ladies and gentlemen, can you please just slightly be patient at pace wait, and then let's look at executing and let's make money. So for now, ladies and gentlemen, thank you very much for your time and participation. And thank you for giving me this opportunity to share my views and do what we love doing day in, day out. So thank you very much, ladies and gentlemen. Uh, Good night, take care, and God bless. Let us meet on Monday, same time, same place.